A very good morning to all our viewers and welcome to Opening Bell. I'm Stacy Pereira and I'm here to take you through all the news and cues that you need to be watching out for and that could really go on to impact your trading day. So let's get you first a trade setup of what we're really looking at, what the markets are going to take cues from. Well, Indian equity markets are likely to remain in that choppy, range-bound manner where we saw the Nifty holding on to that 19,800 levels, and we'll have to wait and see whether it actually breaches those levels now. GIFT Nifty is indicating, though, a lower start for the Indian markets. But this is obviously in the absence of any global cues because the US markets were closed overnight on account of Thanksgiving holiday, and they will be open only for half a day of trading on Friday, which is considered as their Black Friday, really. If you look at the Asian markets, though, those are trading in a mixed range. They are reacting to economic data coming out of Japan, where the Japanese indices are, though, up about 1%, and they're reacting to the CPI numbers that have come in from Japan, with headline numbers coming in at 3.3%. So really all of those reactions, a thumbs up coming in there for that number, because we were looking at Japan going into deceleration or de-inflation, and now you're seeing that number actually pop up. Well, if you look at the commodity side, oil prices have dipped further, in fact, extending those losses by about 1% more on expectations that the OPEC Plus may actually not cut the output further into next year. Remember, they were supposed to meet later this week, but have postponed that November 26th meeting that was scheduled. But let's also look at what the fund flows are looking like. The FIIs are net buyers as of November 23rd's provisional data into equities. They've bought 255.53 crore rupees, whereas DIIs too are net buyers. They've bought in a 457.39 crore rupees into equities. Let's also look at what the F&O Qs are really suggesting, and if you go by the PCR, that is the Nifty put call ratio. That one is indicating that the mood in the equities has increased further to 1.11 for November 23rd, and this versus the 1.07 levels that it saw in the previous session. Now remember, above 1 PCR indicates that traders are buying more puts than calls, which generally indicates that there's an increase in that bearish sentiment, and we are seeing that play out for some time. But if you look at the F&O ban list, now NSE has added Balrampur Chini and Hindustan Petroleum Corporation into the F&O ban for November 24th, whereas they've gone on to retain Hindustan Copper, Indiabulls Housing Finance, India Cements, Manappuram Finance, MCX, RBL Bank and Z Entertainment are going to continue in that ban list, whereas BHEL and NMDC have been removed from the said ban list. So these are all the stocks that you're perhaps not going to see trading in F&O activity in. Let's discuss further the stocks and strategies that you need to be playing out in this kind of market, the stocks that are going to be in the spotlight today. And joining me to do that is Vaishali Parekh, the VP Technical Research at Prabhudas, Lilladher. Well, good morning, Vaishali. Thanks for speaking to us here at Moneycontrol. Well, if you look at the benchmarks indices, and let's start with those first, we can talk about the Nifty, where we're seeing the bulls really trying hard to get past that 19,850 levels, which is that crucial resistance. But is it possible for us to reach that last week high? Because it's quite a tight range between that 19,650 to 19,800, and we've been there for 6 sessions on the trot. So are we likely to break that, or this is going to continue in the same range-bound manner?
Very good morning, Stacey, and thanks for having me on the show. So yes, market has been consolidating, and what we need is real good participation coming in unison from all the frontline. So it could be the banking stocks, it could be Reliance, it could be the IT index, but that's not happening right now. So I would say this scenario of a range-bound move, that is 19,850, still continues to hold as a resistance, and the near-term support lies at 19,600. So, well, right now, that is what the view is. And likewise, even in Bank Nifty, we are not seeing all the frontline banking stocks getting into momentum. It's only stock specific. So, well, we need to cross 44,200 decisively to see a further trend formation. Till then, my view is still sideways, even in banking index. The near-term support lies at 43,300, and the resistance is at 44,000 for now.
Right. What about in the specific bank stocks? Because, after RBI came out with that risk weight, that was put forward for the banks. Now there is more caution when you're looking at banking stocks altogether, and which is why perhaps the indices, the bank Nifty also not getting that momentum. And how should one be looking at both the index as well as specific stocks in this?
So, if you talk about specific stocks, well, I'm looking at HDFC Bank because, nothing really has happened in this stock, and it is holding on in spite of all the choppiness that we are witnessing in the last few days. So, HDFC Bank for near term, I would say the target is support is at 1500, and a trading target comes to around 1550. Likewise, yesterday we saw Axis Bank also showing marginal strength. So I would consider Axis Bank also, but for this, it needs to sustain about 1010 levels to have a conviction for a further run-up. Whereas we are looking at SBI, IndusInd, Kotak, they are getting into a little bit of profit booking. So banking stocks are also, it's a mixed basket.
Right, so a mixed basket when it comes to banking stocks, and in fact a lot of brokerages that have come out with their calls on Axis Bank specifically maintaining that buy call perhaps for Axis Bank. But do stay on with us, Vaishali. Let's also address a couple of stocks that are going to be in focus today in trade before the bell rings. Well, there's going to be Siemens, and that's because the company has received an order from the Commissioner of CGST as well as the Central Excise in Belapur. They have imposing a service tax liability of about 23 or 24 lakhs, we could say. Now, the said order also mentions about the levy of appropriate interest and penalty amount, which is under the Section 78 of the Financing Act. So that might see some bit of pressure, Siemens, after getting this notice. In fact, there are a lot of companies that have been getting tax notices, and which is why a lot of fluctuation that we're seeing. But this will perhaps impact the stock when the markets open. But let's also shift focus towards IHCL, where there we're getting to know from a CNBC exclusive where there has been a personal data breach of nearly 1.5 million customers of the Taj group of hotels, and now this is likely to have been compromised after this data breach. Now, the company does confirm that this has happened, and it has gone on to say that the data was not of sensitive nature and the relevant authorities have been notified as of now. They've also said that there's no impact on the business operations by this. So they have approached the CERT and sought some kind of action, but you're perhaps going to see the stock also react to this news. Do note that this data was collected from between 2014 to 2020, which could indicate that this breach perhaps happened around 2020. So that could be one stock that is also going to be in focus. In fact, let me bring on Vaishali again and get her to give us a little bit of perspective, not just on IHCL, but on hotel stocks in general. Because, we just had the festive season, we just had the World Cup that saw hotel prices really rally and, skyrocket, especially in the cities that these matches were held in. How are we looking at hotel stocks in general and that industry going further from here, Vaishali?
So, I'm sorry, I won't be able to talk much about IHCL because I don't have much of data. But, talking about the hotel industry, I would say Indian Hotel, if I were to say, it is in a very good, strong trend. So, forget the match part is over. But yes, we are once again, the festive season is round the corner, and the hotel industry is likely to continue to do well. So I would say Indian Hotel, if you look at the chart, it looks very promising even from here on. I would say 405 acts as a very good support. For the near term, I would look at a target of 440, 445. And if we see that market continuing to move in an uptrend and the stocks also participating, this stock is likely to go even higher.
Right. Right. Well, we'll also see how those really react, because we are, there is news that is coming in. So we're going to see some bit of stock action there. Let's also look at a power industry. That one's going to be launching its QIP and to an issue of about 1,000 crores. So that one will be interesting to watch on how it pans out in trade. But of course, that is the opening bell there for you. Let's look at how the markets have opened. Little bit of positivity that we're seeing in the Nifty 50, at least opening up there above that 19,800 levels. It's managed to keep on that track. Just 0.1%, so not much movement, rather flat, and it is still in that range. Let's hope that it breaks that 19,875 levels. That was the last week's high. So hoping that that momentum carries on later in trade. But other indices also there that we can be watching out for. The Bank Nifty also trading in the green, so a little bit of positive coming there. In fact, yesterday as well, the Bank Nifty managed to snap its losing streak and gain about 100 odd points by the end of trade, but now too trading just about 0.1% higher. So that one in the green too. The mid-cap indices also, these ones have been, both the broader indices have been trading in quite divergent ways, and we are seeing the mid-cap indices yesterday as well hitting that record high. Today again on the positive side, BSE small cap there almost half a percentage point higher in opening trade as well. So pretty much broader markets in tandem, we could say, with the benchmarks. Nifty IT there on your screens, that one a slightly bit in the negative, some bit of pressure coming in there, we could say, for the IT indices and stocks, whereas other on your screens, Nifty Pharma as well, about 1% higher right at the opening. Now, yesterday it was among the biggest losers, we could say. Today about 1% higher. So I'm guessing there is a bit of profit booking that is happening on dips, we could say, and which is why that one is propped up. FMCG on your screens about 0.2% higher. Let's look at the other consumption names as well, just about 0.03% for the Nifty consumption index. Let's look at also the top gainers and losers in trade. Well, they're on your screens. You can see Cipla, Divi's Lab and DRL. So all those pharma names, and which is why you're seeing that index up and about more than 1%. Ultratech Cement, Hindalco as well as Sun Pharma. So pretty much all those consonants of the pharma index in your gainers list. Power Grid, Axis Bank as well as Eicher Motors in your top gainers. Like top losers on your screen, Hero Motocorp, BPCL as well as TCS. There is also HCL Tech, Apollo and HIL. All of these, of course, having some HUL, I beg your pardon. So those are your top losers that you can see on your screens in today's trade. So quite a mixed bag that we're seeing, because the one day, if something like a Hero Motor was the top gainer yesterday, today it is in the red. So perhaps you're seeing that kind of buying across, whether it is a pharma as well as auto. So let me bring in Vaishali once again to take her cues of what she's making of how the markets are trading this morning. Pretty much again stuck in that range that we've been talking about. But let's specifically look at autos, because that is one that has seen pretty much, a good rally so far. We've seen most of those stocks up and about today. In fact, we're also going to have Maruti's board that is going to meet. So give us your view on how one should be looking at autos, be it even two-wheelers as well as four-wheelers. What would be your picks in this space?
No, well, two-wheelers have been doing very well, but of course, I would not recommend at these levels for a buy. But those who are holding should ideally book partial profit or keep a trailing stop loss. And as far as the four-wheelers are concerned, I think Maruti is still going strong, and it's a very steady growth. So I would say 10,300 holds as a very crucial support level, and it would be buy in decline or keep holding if you one has bought for a positional target of 11,000 to 11,300. The other stock that comes to my mind is, of course, Tata Motors and Ashok Leyland. So Tata Motors already has given a good run up, so it may consolidate at this level. But keeping 660 as support, I would be looking at a target of 700 to 720. And the other stock that is fairly priced and it still looks promising is Ashok Leyland. We have been recommending this stock since quite a while. So I would say now with the support of 173, the stock needs to move past 180 levels decisively to look for a higher target of 190. So of course, not in a hurry, but this stock definitely needs worth a watch.
Right. So interesting picks coming in there from the auto segment as well that one could be looking out for. Let's also ask Vaishali about the cement space, because we're seeing some bit of action happen there. Just yesterday we saw Ultratech Cement falling nearly 2%, but we saw Kesoram up by about 5%. And this after there was news and reports that Ultratech may be looking to buy some bit of Kesoram cement business. Now, this is just one of those rumors that really takes the streets. But in general, the cement space or the infra space, if you have to talk about it in the broader sense, Vaishali, what are you looking at? Is it a good time to be looking at this space right now?
Well, the buying opportunity was at much lower levels. So right now, it's not an ideal level to buy because it's already in the overbought zone. I mean, if you're talking about Kesoram itself. So I would say just wait for a dip and that would be a good buying opportunity.
Right, so wait for a dip. In fact, that 5% rally yesterday then people have to actually wait it out to look at this space in general. But Vaishali, are there any other sectors or stock specifics that you would like to recommend for our viewers today?
So technically, I would say, well, on the front line, I would say Infosys is a good level to start accumulating. And the other sector, if I were to talk, well, chemical sector, or most of the stocks are in oversold, especially the mid cap. If you talk about Alkyl Amine, Balaji Amine, I mean, these are the stocks. And in the front line, if I were to talk about Aarti, Atul Limited, these are all the stocks which come to my liking at these levels. So I would definitely have a look at these stocks.
Well, right. Well, thanks so much, Vaishali Parekh. They're giving us a couple of stock recommendations this Friday morning. But thanks so much for joining us as well on the show. Well, let's also shift focus towards the fundamental side of the picture, where we have not that many headwinds, we could say, at this point. The economy quite brightly poised, we would say. But let's see what are the other factors that could actually change this or could really help the markets then propel further ahead. And joining me to do that is Prakash Diwan. He's an independent market expert. Good morning, Prakash, and thanks so much for joining us this morning. Well, let's look at the broader picture, where we're seeing there are not much external factors that are really impacting our markets, although we're still stuck in this volatile consolidation mode. So what really would then help us propel or get out of this, you think, at this point? What could be those key triggers we need to be watching out for?
Right. Good morning. So you're absolutely right. I think the way overseas cues have started turning favorable or at least benign, the way crude is kind of supportive of growth. And importantly, I think the market's now kind of trying to reset itself, given the fact that the earnings season has been far better than what we thought. There's been a very clear indication that margins have improved in certain pockets, revenues continues to grow, and somewhere the balance sheet health of most companies, especially even the smaller and mid cap segments, is far better. So what the market is doing is it's probably waiting to allocate money, but the impending 3rd December numbers, election outcome that is expected, could probably be a point of waiting. I don't think it's so decisive that it could alter the direction of the market, but at least it will definitely have some sort of a bearing in terms of your allocations beginning to end. So I know for sure that a lot of funds are in the mood to wait till general election outcomes are clear. But in the meanwhile, you'll have a range-bound kind of a trade. But don't be surprised, the kind of large cap activity that we are seeing could probably mean that you could touch some new highs on the Nifty very soon. And there is consolidation, which is very healthy in the mid-cap side. So not major triggers, but I think it'll probably be just a waiting period next Sunday getting over for the 3rd December milestone. But apart from that, I don't see anything negative or anything largely positive that could move the market.
Right. So the elections is definitely going to be a factor that is going to be on the radar. Prakash, do stay on with us, but let's also shift focus to the primary markets, where we're seeing a lot of action there. Of course, investors' interest in the initial IPOs are seeing, really exuberance, we could say, showing no sign of cooling down. Both Tata Tech as well as Indian Renewable Energy Development Agency, or IREDA, both have garnered some massive subscriptions, we could say. Let's talk about IREDA first. Well, that one, the IPO was subscribed about 38.8 times on the final day, that was yesterday, when it closed for bidding. This means that the issue, which was actually just 47.09 crore shares, but the demand for it has come out at about 1,800 crore shares, which means that if they were looking to raise just 2,150 crores, but the demand has come for 83,440 crore rupees. So just look at that massive jump that you're seeing. Clearly, this has been spurred mostly by the 104 times booking that it has seen from the qualified institutional buyers, or QIB portion. And what could really be the factors working in, we could say, remember this IREDA operates in a rather niche market of the renewable energy financing. it is a large market now that we are looking to transition, and the opportunities seem exponential and for growth as well. So, and the way that they have performed so far, they're mostly catering to a secured as well as diversified asset base, and they've also shown an improving asset quality as of now, where they've seen negligible write-offs so far. The IPO pricing, if I have to go by, quite reasonable there. The price range of just about 30 to 32 piece. And remember, this is the first public issue that has come from the sector enterprise after LIC's IPO in May last year. So, which is why that kind of exuberance you're seeing. But if you have to shift focus towards Tata Technologies, remember that IPO will close today, and that has created a record of attracting the highest number of applications of its issue among the private sector companies. It has got about 50.6 lakh applications, and this only on its second day. Today will be the third day where it will close its subscription. So a lot of excitement in the primary market. And let me go back to Prakash and ask him how one should really be trading this market. Is it a right time to be looking at IPOs right now, given the external volatilities that we're seeing within the market? How are IPOs looking, and what would you suggest today? We have 4 of them closing for subscription. So how are you looking at them, Prakash?
So, it's quite interesting that you had some of these big IPOs, well accepted or received IPOs all coming together. So what's going to happen is, in fact, you can imagine if these had come serially with a gap of 6-7 days each, the subscription would have been higher. But this also demonstrates the fact that our markets are getting deeper with the kind of money which is coming in without much of leverage this time. So it's quite heartening to see how people kind of, want to look at new fundraise from most good companies. The way to play this is, in my view, if you win a lottery ticket in one of these, it's good enough, but that might not be very substantial in terms of an allocation. But look at listing, especially IREDA is a very, very sound business. As you rightly said, it has a visibility of compounding itself at 20-25% CAGR for the next many years. And from that perspective, if the listing price is not too steep, then you have an opportunity to allocate a little bit of a meaningful quantum to the name. But subscribing to these IPOs, the only 2 IPOs that I would look at is actually Tata Tech and IRED. IRED is already passed, right. But look at listing and then probably take a view, not the other ones, in my view.
Right. So that's the strategy for at least IREDA. Prakash is saying wait for the listing and then we can take a call. But Prakash, what about, before we could talk about IPOs, we were talking about parking our investments, and people often ask that question of, between large cap, mid cap and small cap. And we are seeing a lot of activity there also in such kind of a market. What would you be suggesting, and what are the kind of names one should be looking at?
So, as I said, from the time the state assembly election results are out till, let's say, the general election outcome, which is still about 5 months away, 5 months plus away, you will have a range-bound market with lots of triggers which could impinge and add to the volatility. We've seen a fairly less volatile phase post, let's say, the last earnings season. But my sense is that investors will be better off if they remain with sound, big names, which they would like to hold beyond the election outcome also. So from that perspective, don't look at stocks with just a very short-term perspective, because you could actually be caught on the wrong end in that. But look at OMCs, for example, oil marketing companies. They are on a run. There's a reset that's happening. The earnings very clearly tell you that in spite of them not being able to hike, retail pricing, they've still managed to do very well on refining and the combination of marketing margins. So that kind of a thing, and they're available at very good, valuations, low replacement cost theories and all that. But look at some of the PSU banks. They will surprise you, will continue to surprise you and grow far better than what they've done in the past. And to some extent, I think FMCG is underrated. Post this festive season, you'll probably start seeing that comeback happen. So you could probably, but stick to good names, big names, which give you, pretty nice sleep at night. Don't look at things which you're very worried about. So stay away from the small names which are very volatile. because volatility could actually go up in the next 3 to 6 months.
Right, Prakash. In fact, you spoke about FMCG, and yesterday we saw Honasa consumers really, hit that upper circuit as well. And you're right now suggesting one should look at the bigger names, more reputed names, and stick with the blue chip. But what about new age tech as a whole? And we are seeing a lot of these stocks, really correct after they've listed, and we're seeing some bit of action there. Do you think we are seeing turnover there when it comes to these names, the new age tech stocks?
No, so there is very clear turnaround that's happening, that's underway, and it's quite evident in the likes of Zomato to a large extent in delivery, and even Paytm. Paytm might still have the nature of the beast is such that you have very large investors who probably are running out of their allocated time to be invested, and they would want to kind of churn their portfolio given their own compulsions. So you will see some big exits, and that will keep a pressure on the stock, which is a good entry point for most retail investors because it's still available at a huge discount to what it was offered at, and in a market that's growing for them. So I don't see any reason why you should look at them the same way at these valuations. In the sense, you could look at them more positively and not so with so much of skepticism. But Zomato is also run up. So the later you get in, the lesser your risk reward this relationship which favors you. But I think delivery, Zomato, Paytm, as I said, are still some of these new tech companies which are moving to path to profitability in a very distinct way. We'll probably look at that.
Right. Prakash, also let me get your view on crude oil prices, because that is something that we've seen dip at least this whole week, that we're seeing come down almost to $81 per barrel is where we're looking at it. Overnight as well, we saw about a 1% dip. Of course, this has to do with the external factors like the ceasefire that has been called in Israel and the Hamas war that has kept really the lid, we could say, on these prices. It augurs well for a country like India, but overall, how is it really going to translate perhaps for our OMCs as well as overall inflation and that picture?
So, yeah, that's a very interesting factor. One of the biggest impacts that we end up having, and which is very direct and straight and quick, is crude prices. But let me tell you, the prices on crude internationally are within this range and on the softer side, not because of anything else related to what's happening on the Israel-Hamas war. I think it's more of intent. It's very clear that if Saudi Arabia wants the prices to remain on the softer side, they'll manage to do it. It's as simple as that. And if they want that, you could have probably seen crude go above 100 and in this flare up. It was so convenient for them. But the whole idea is that the kind of demand and supply equation that's now we are staring at is way different than what it used to be a couple of years back. In terms of what the US has done, it's dependent on natural gas and its own captive production and consumption. It's very different than what they used to do. So stocking for the winter, all those dynamics have changed. If you ask me, I'm not a specialist on crude, but I'm just kind of trying to read the tea leaves within what's happening. But my sense is if crude remains range bound, which it seems like because of the intent by some of the larger players like Saudi and all, you have a very good inflationary environment that you are looking at or getting into from an Indian perspective. And I would continue to look very positively to OMCs, refiners as well. Some of these refining businesses like Cochin Refinery, Mangalore, for example, has augmented capacity. They start doing work for ONGC's output. It's so much that's happened, but the price hasn't moved much. So so you will see these kind of advantages happening very soon. But the only thing is these are PSUs. They are always susceptible to announcements or regulatory changes that you need to kind of price in. But the environment from the crude perspective is extremely positive for us. And you could definitely, as I said in the beginning, OMCs is a great pocket. Refining, specific refiners is another pocket that you could look at. But be a bit selective. Don't go overboard. That's the whole idea.
Right. So selective in at least oil and gas stocks, if you're looking at them. Be picky is what Mr. Prakash Diwan says. Well, thanks so much, Prakash, for joining us and giving us your perspective on various stocks and sectors that we could be looking at. But with that, it's a wrap and goodbye from the entire team that puts this piece together. Thank you so much for watching. But please do post in your feedback for us in the comment section below, and also follow us at on the link at the bottom of your screen. For the rest of the updates, do stay tuned to Money Control as well as the Money Control app.